Good morning, everyone. Good morning, Jose. Why are we here? Voilà, much better. Oof, a little switcheroo here. Good morning. How are
What's
we?
going what's going on, Neil? And good morning to everybody watching. We already have some viewers getting on. So it is the day after Nvidia earnings and a lot of other earnings out there that happened last night. So thank you for joining. I'm pretty sure we're going to talk a little bit about everything today, Neil. So I'm doing good. Um,
It's the morning
haven't
after.
gotten much morning. Haven't gotten much sleep yet, but I feel like there's still so much information I need to pick up from this earnings call.
I mean, for now, I'll pull up the pre-market action here. For now, it seems like futures are flat. I'd say flat across the board. In Asia, it's also a bit mixed as always, and in Europe, it is a bit red right now. I mean, I've seen some very, very interesting takes on the Nvidia weakness, let's call it. Very, very interesting takes on the Nvidia weakness right now. Um, we have here Telmo Tech saying that the bubble is very slowly deflating. I mean, I don't know, a $4 trillion company that
I,
still
I
grows 50 something percent.
I just don't get it. I don't. I hope I hope people can help me understand when they talk about a bubble here when it comes to Nvidia. It's like looking at a forward PE ratio of like 35. A company still growing at a 50% year over year basis. How does the bubble make sense? And to me, it's crazy. I saw you had a tweet today or X or whatever we call it nowadays, Neil, about the concentration risk about Nvidia. Where have people been? Where do they think most of their chips go to? It's a selected amount of customers right now. How is that a bearish thesis 2 years after this kind of big tech is the main ones buying the chips? Like it just it's I don't know. I can't believe certain people have these little brain cells sometimes. It's like this is the bearish thesis this time, this earnings is three customers when we already knew four or five customers who are spending about $100 billion in capital expenditure next year are the big I just don't get it. How did one not put it together? Like, oh, this company spends this much in capex. How are they not a top concentrated customer?
Yeah, I mean, it's very simply put here. Yes, of course, if you let's say take these two well paragraph sentences and you only read that and you don't know anything about the business that we're talking about, or the story, then okay, then it looks scary, right? Because yes, 50% of data center revenue comes from large cloud service providers, and then three direct customers accounted for 23, 19, and 14 of accounts receivable balance. But again, you look at the amount of spending that's going on right now across the board. Um, how could you not know this? Like, if it was something else, then we would have seen AMD's revenue increase by 100%. But it's not. So they have to buy the chip somewhere, right? Unless they're paying ghosts like $100 billion. It just doesn't make sense. And this, I think, is the most important part. Like, if one of these players decide to stop buying from Nvidia, I think they are replaced within an hour, maybe
Yeah,
even less, probably
yeah,
less,
easily.
probably
And
less.
the other thing, I kind of talked about it in the stream yesterday, is for Nvidia to it takes time to it's a whole supply chain process for
Yep.
them to get the wafer into an actual server. And for these massive players like Microsoft, like Google, who are buying thousands and thousands and thousands per week, or per month, Nvidia needs to know a number a year in advance. So that's why you kind of see that concentration risk already. It's like these players already know that next year I need X thousands amount of GB300 or whatever Lubin or whatever we're gonna have. I'm placing that order right now. Um, the other thing that I thought was a bit interesting, I mean, I was gonna. Oh yeah, the
We're
valuation.
barely down. We're barely
Yeah,
down right now.
barely down. Um, it's I someone mentioned here.
110.
I don't think they were trying to be bearish or anything. The MTN. I actually could share chat, so I forgot. Um, now I think
CoreWeave
they were just
101.
nice. Let's see. It was like it's not deflating, it's decelerating. And I agree, right? I
Mhm.
mean, obviously, and I think this should also be as common sense as the other thing, right? It's common sense number one. Why do you think there's concentration risk? There's only the big companies really spending that type of money. No, common sense number two, the acceleration. You can't be growing once you keep growing bigger numbers. Your rate of acceleration is not going to increase. It's going to slow down. So that's another thing. And again, I don't think the MTN was kind of being bearish here. It's just kind of comments, just stating facts. But I do think that a lot of people are saying, look, the deceleration, this means this is in a bubble. Or if we look at forward PE ratio, right, of 35, of around 35, 36, that for the next 12 months, if you only grow earnings per share by 10%, you're already kind of 10% isn't crazy. It's not impossible for this company to grow 10% compounded annual growth rate. You see that forward PE ratio go down to the 20s in a matter of 2 years. Now they're growing earnings per share at much faster levels than 10%. But just to kind of showcase that even at a 10% growth rate, a forward PE ratio of 35 does not seem anything like a bubble to me. So yeah, I don't know. I woke up this morning a little bit angry, not because the stock price was down. I could care. I don't care about the stock, but it's just the reason behind the bearish thesis that are happening right now. It's like I I, I don't know. Sometimes dumbness gets me mad.
Yeah, I don't even think it's bearish thesis or anything. It's
Mhm.
just hating on Nvidia, probably because most people missed the rally or still don't understand. Um, Quick touching on this one, what is Nvidia doing or can do to reduce its dependence on hyperscalers? I don't think Nvidia needs to do anything. That's the thing. It's the hyperscalers coming to Nvidia because they like it so much. Like,
Yeah.
why would Nvidia? Like, Nvidia is doing what it should be doing, which is releasing the best products in the market,
Mhm.
and whoever is willing to pay the most amount of money will get the products.
Yeah.
It's as simple as that. Like, Nvidia does not have to do other than
Mhm.
try and ask TSMC to maybe increase capacity so they can sell to more companies, to more enterprises, more countries as well. But Nvidia essentially, again, Nvidia has a
Yeah.
luxury problem, does
Mhm.
not have a concentration problem.
Yeah. Yeah, and I agree here. So two things here. Now, first, I agree with you that Nvidia doesn't have to do anything. The great thing about it is because of that strength that it has, pretty much what you were alluding, right, Neil, because it has the best of the product right now, the yearly cadence, it has the ability to have this concentration. It's not really a risk. It's more of a strength right now, but it is kind of doing a little bit of kind of ways to diversify about it, right? It's kind of playing with the partners like Nebius, like CoreWeave, like that. So that's one of the first ways it's kind of doing to reduce its dependency of hyperscalers. The second is it's working really well with kind of your sovereign nations, and your sovereign nations are working with kind of your neo clouds as well. So it's a little bit of what I just mentioned in the first point. So they're working with that, going to direct customers, sovereign nations. And the final thing, Neil, is we're kind of entering the enterprise wave of AI. So now you're starting to see individual enterprises refresh some of their cycles. So most of them still were in traditional classical compute data servers, which were pretty much ran by CPUs. We saw from that RTX Pro server release that they announced, I think 2 or 3 days ago, that you had companies like Disney, like Foxconn, like all these other enterprises starting to build their RTX server lines. And that's not a data center. That's just for on-premise for a lot of these enterprise solutions. And we heard from the earnings call yesterday that the RTX Pro server is expected to be a multi-billion-dollar revenue segment for them. So it's not going to offset, but they are building those little building blocks of, we have the neo clouds, we have sovereign nation, we have the enterprise players. So they can still continue to have that strong dependence of hyperscalers, but they also are finding ways to produce into other markets. So like you mentioned, they don't have to, but they're kind of at least setting a block to make sure they have some revenue from other selectments as well.
Yeah, I mean, the the thing with going with the likes of also Nebius or CoreWeave is because you want to accelerate the movement, right? If you can have more players moving the right direction, then you're accelerating the whole movement, and that's a good thing for Nvidia because you grow their ecosystem, which is the end game, right? You want to grow the Nvidia ecosystem, and that's what players like Nebius and CoreWeave are getting you here. And again, I don't know. Yesterday I saw, uh, uh, um, yeah, no,
Yeah.
yesterday. I mean, people were freaking out. Oh, it's the end. The bubble
Mhm.
is. I mean, it's over because data center number missed by what 0.3%
Mhm.
or what was it? And I don't know. Again, people always try to look for the tiny detail, the worst thing in order to make a post, try to
Oh,
sound
yeah.
smart. But at the end of the day, this is a over $4 trillion company that is
Mm,
growing above 50% for now 10 quarters in a row, and
mm.
still expected to grow, although right now the expectations are for fiscal 27
And
for it to only
all
grow
pro-
28.5%
that-
and 18.1% the year after that, which
Mhm.
is still
And-
$308
yeah.
billion dollars.
And like I mentioned right there, I mean, even if I know this is revenue, so it's a bit different, but just on earnings per share, if we just get 2 years of earnings per share growing at a 10%, you're already at a PE ratio, a forward PE ratio of like in the high 20s, which it's not crazy for. I mean, Apple, who's not growing at these levels, has a forward PE ratio of like 33. So if I don't want to sound like a mega bull of Nvidia, right? I don't think the stock price, and I just want to. Sometimes we get new viewers, so I just want to say I don't believe stock prices for Nvidia will go up on a straight line. I think, I think what we have here is a company that has the opportunity to grow into various technologies and industries. There's going to be moments like DeepSeek. There's going to be moments like news, whatever, that create downturns, the liberation day or whatever. I expect that to happen. That's why for me, in any stock that I own, I could care. I short term, I'm always bearish in the short term. It prepares my portfolio, prepares me emotionally, like, hey, the stock dropped 10%, whatever. I'm not saying it's dropping, but it prepares me that stocks can go down. Long term, I still believe Nvidia, with what we're seeing right now, is an extreme market beater. And Neil, man, I can't believe you're getting all this love on the CoreWeave, which has been my baby, but now it's become your thing.
Exactly. You see, you only if you want things to go up, you only have to convince me to buy, and then look what happens. Look at this magical thing. Poof, back into triple digits. I run the market now. But I mean, yesterday it was interesting because this was probably the only company or one of the only companies that actually got a shout out during the earnings call. When it happened, the stock went up, I think, to $98 or so. Then we ended actually in the red, and today we're at $102.8. I'm not surprised. I'm also not surprised that Nvidia is only down now 1% pre market. Let me actually find, because I've seen already like 10 price target upgrades for Nvidia. So it's like everybody's freaking out, but no, suddenly Wall Street is upgrading their
Yeah,
price targets one after the other. So I guess maybe it's not the end. Guess maybe it's not
no,
the end for Nvidia.
and I mentioned it when we were streaming yesterday, and in my videos, like there's no doubt in my mind, analysts were going to wake up and increase price targets. I mean, you had a great guidance without China, and a lot of people were talking about that without China sales. Still expecting revenue to grow dramatically. I mean, what was it, $46 billion? What was quarter revenue this quarter? 46,
Yeah,
I think.
46 point
And they're
something. Yeah.
guiding for 54.
With the
Like,
option of an extra 2 to 5 billion. Yeah.
yeah, with an option of like you're growing an extra. I don't know. I don't know. Today is a day that bears are gonna get on my bias that side just because of pure stupidity. That's the only
Un-
reason. I
Unless
don't
the
care.
market turns green.
um, no. Even if that, I just think it's sometimes when it gets me. I guess because I obviously look at this one or this space on a daily basis. This is like my baby, the semiconductor AI space. So it's like this is really the best bear case that we have right now over concentration. It's only 50 something billion dollars in guidance for next quarter, still expecting a nice 8 billion or so growth without China. Like I just again go ahead, Neil, before.
No, yeah, I mean the concentration risk bear argument has been here for a while, and yet for some strange reason this company still manages to grow and generates billions of dollars in free cash flow. Although this quarter free cash flow did get hit. Uh,
All right, I said my piece. I just had to let it all out. Some people are gonna think that I have like 1,000 calls or something. I have no options on Nvidia. It's pure shares. So
now
it's
you
just
know
really
now you know how I feel when I have to defend my PayPal's and my SoFi for the last two years or so.
um
But yeah, no, these are the price targets right now that
mhm,
are being upgraded. As you can see, all of them are up.
mhm,
All of them are up. So seems like the market wants needs to go to $200 in the next
yeah,
12 months or so.
mhm.
Um, I did see. Did you see the whole conversation on X between Stephen and Joseph Carson about the Costco argument? Like, why is
Ah,
Costco at the 50x PE? Yeah, Jose is, he needs his own therapy session. Um, so yeah, now Nvidia we have here a 36 forward PE, and Costco right now sits at, I think the last time I checked 49 or 48.6
Sorry,
times.
just a quick shout out to Eddie. He just gave me a super chat. Thank you, Eddie. Yeah, so I kind of saw someone posted us, like tagged us on it, and I kind of looked at it real quick.
But it was too long, huh? It was too long to
Yes,
read.
to read. So I was like, I don't know what's happening here, and like I said yesterday, my mind was just on Nvidia earnings, so it's like, let me just stop before. Um,
Yeah, at first I thought it was Bill Ackman sending us a whole book tweet. But yeah, the discussion right now, and it's this tweet right here from Steven Dividend Stream, um, talking about again the comparison between Costco's
Oh,
valuation and Nvidia, and then he also
sorry,
asks
first, Neil. Am I supposed to know? You introduced me to Joe Carlson, I guess. Is this the guy you talked about to me about a few
Joseph
weeks ago?
Carlson. Yes, yes,
Yeah.
yes.
Okay. Okay. So first time. Am I supposed to know Steven?
No,
Okay. All right.
but he does appear
And again,
on
I
Amit's
I don't
channel.
mean to be rude there. It's very hard for I usually don't consume any content at all in
No,
the
he's not on
financial
YouTube.
world.
He's
Okay,
not on
or
YouTube.
anything. Okay, all right.
But he does feature sometime on Amit's channel. I think on Tanner's channel a couple of times as well. He writes on Seeking Alpha.
Oh,
Um,
that's okay. So that's him. Okay, so he looks a little okay. So he's the one
yes,
that shows up on the okay, okay. Then I know Steve. Steve. Okay, okay. This is Steve.
Steven.
Yeah, Steven. Okay, okay.
Yeah, no, I mean, I don't, I think I've been on the stream with him once or something. But anyways, there is this whole discussion about Costco's
Yeah, I've been with him once.
valuation,
Okay, sorry. Go ahead. Sorry, my
Nvidia,
mind was racing.
Amazon, Google, Meta. So he goes on here to show Costco's operational facts. Very, very good, of course, company that has been performing very well over a long period of time. Then talks about Amazon, EPS, whatever. Then Nvidia. I mean, this thing goes on and on and on and on and on. So he finishes off by showing us this: Amazon, Nvidia, Costco, share price, EPS for the year, 2026 EPS 27, and then
Look
I
at that.
guess here valuation wise and the growth.
I like
Now,
Steven already.
now the thing, okay, the thing here is one. This is pricing metrics based
Mhm.
on analyst projections, right?
Yeah, which are
This is
already low.
yes, with no, and these aren't. This isn't really a valuation model. It's a pricing
Mhm,
one. Like a PE is a pricing metric.
mhm.
So valuation wise, once you create your own model, you can value the business. Then this discussion goes on and on and on. Bottom line, too long, didn't read, couldn't care less. It's one side arguing that Nvidia should probably be priced at a higher premium than a Costco. On the other side, which is Joseph Carlson's side, he thinks that the reason why Costco is being valued and is being priced so high, which is like this. And by the way, I mean, if you look at Costco over the last 5 years or over the last whatever, it has been doing extremely well. The reason why that is because Costco is. Wait, who's playing in my? Are you playing? Do you hear anything?
Is it me?
I don't know. Maybe. Yeah, I don't know.
What was it?
I don't
Now
know.
I'm
Every time
curious.
I thought I couldn't. I like it's just noise in my head. So I was like, do I speak and my mic speaking? Never mind. Anyways, Costco being at almost 50 times PE, forward PE, is because the market is more comfortable paying a high premium for Costco because of the stable business. Because revenue for Costco has been going up steadily. It's not a one-time thing. If I go and pull up the revenues here for Costco, let's see. Why is it only showing a couple of years here? That's strange. Ah, much better. You can see for Costco, it goes up quite steadily. Compounded annual growth rate over the last 14 years, 8.4%. But it's not right. With Nvidia, we had like a steady grower, and then suddenly in the last 2 years, it exploded. So the market is like, okay, but what about 5 years from now? Will Nvidia still have super high margins, growth, the EPS growing at the same rate or maybe a little bit lower, maybe just faster than the market? Is that worth a higher premium? Currently, as you can clearly see, the market says that yes, Nvidia deserves a premium, which is why it's trading at 36 times forward PE and now 50 times trailing PE. But the market is also saying that, look, with Costco, we don't care about what future AI company might pop up or if there is going to be a lot of demand for next generation GPUs 10 years from now. Right now, we're willing to put our money in Costco, pay a premium for that because we know that, well, the millions of members of Costco, Jose included, are loyal to Costco, so they'll keep on shopping there no matter what. The business is doing very well. Revenue growth up and to the right, profits up and to the right, steady business, and there is maybe less risk of a Costco being disrupted. And the thing here with the market, and this is also why an Apple, even though Apple barely grew over the last couple of years, and Apple did get a premium from the market compared to other tech companies, because the market feels like, again, it's all about market sentiment towards a certain stock, which is why some stocks get a premium, some others don't. Apple's future free cash flow seems to be safer than, let's say, an Alphabet, for example. Same story with a Coca-Cola, for example, right? Coca-Cola company right now, let's see, maybe now a little bit less, 24 times PE, 22 times forward PE. Why does a company like Coca-Cola that doesn't really grow that fast get these types of PE ratios, right? In the past, I think it had an even higher PE ratio than this. Why is that? Again, because the market thinks that this is a company, right? People will keep on buying Coca-Cola. As you can see, there was a point here where PE was mid 20s. Well, okay, this doesn't count, but it was higher than some tech companies. Why is that? Simple. If you can predict future free cash flows for a business that are less volatile, you will automatically pay a higher premium for it. And I think that's the thing here with this whole Nvidia Costco type of discussion, is that currently the market thinks nobody can disrupt Costco, although I can make the case that maybe an Amazon could potentially in the future do something. But for now, it seems like Costco's business is an incredibly resilient one, no matter what happens in the economy. And then Nvidia, although it does get a premium, the market thinks it should not have a forward P of 50 like a Costco, even if it grows much, much faster than a Costco, has higher margins, and all of that. The whole discussion here, again, to me, just doesn't make much sense, because we don't know what will happen 5-10 years from now. Like, these pricing metrics only tell us what analysts think the company will do in the next 12 months. And who knows what might happen in the next 12 months. So yeah, if you think that the tech world, AI world will run on Nvidia, then I don't think it will be disrupted in the future, and it does deserve a premium. But then again, I could also make the case as, okay, Costco deserves a premium, but why 50 times earnings? Like, a company like Costco is not a tech company, so why does it get like super, super high tech multiples? Also doesn't make much sense. Like, I agree it's a resilient business. It maybe does deserve a premium, but the premium is not 50 times earnings. But then again, I'm not the market. Like, if the market says that it's comfortable paying 50 times earnings, then go ahead, I guess.
Yeah, I agree, Neil. I mean, the market decides what it wants to, and I can understand the case of the resiliency with Costco, right? It's like you're not going to have 20% of their customers just cancel overnight or over a year or anything like that. Where I guess so you have that kind of sanity check. Where for Nvidia, you kind of have that's worried. What if AI slows down? What if this? For Costco, what can happen? What scenario can you say that people are going to stop going to Costco? They're going to go to Sam's instead or BJ's? Come on, people. Let's be honest. Costco's the GOAT. Um,
Order on Amazon.
For Nvidia, though, while I don't believe it's the case, it's definitely a respectable question from investors. What happens when this happens? What happens with competition? So it creates that uncertainty. For me, I still wouldn't put into I wouldn't price it to that valuation. But I guess Joseph is very bullish on Costco and bearish on Nvidia.
No, it's not bearish on Nvidia. No, that
Okay.
is
Then he's
is
okay then.
is bullish on Costco. He's had it for a long time, but it's not bearish on Nvidia. It's just making the case why Costco is getting that premium. Although, I mean, it's when you look at this, Costco was always trading at a premium, right? So okay, at 30 times, as we've seen here, it seems like the market is willing to pay much more for Costco as we go further and further into this AI period. like you can see, we previously were around 30, 35, and then suddenly we got here in the 40s and then made our way into the 50 times earnings. It's quite interesting. Like as there are more question marks, it seems like the market is going to flock towards names like Costco, which again, it's a resilient business. You might say that no matter what happens in this AI space, who cares about like that when you invest in Costco? You will still go there and hunt for some deals. But yeah, I found this quite strange that over the last almost 10 years or so, the PE has gone from 30 times to like 54 times. Um, but yeah, I mean, someone said recession. Like even in a recession, people will still go to Costco. People will still shop at Amazon because you probably get the best deals there. So I would say these businesses are even more resilient than others, especially during tough times. But yeah, uh,
Cyril, you know my wife.
yeah,
You'll know that
I was
whenever
just about to say.
whenever we go to a new place, it's like, wow, we should stop at the Costco real quick, see what they have. What do you mean, see what they have? You know, they have new stuff. It all depends on where the area is. We can try to find some nice stuff. I'm like, all right. I remember when our first time we went to Hawaii, um, we had to go to Costco. We just drove to Canada. She wanted to stop at Costco. So I wonder if Cyril here knows my wife as one of the Costco cult members.
Yeah, no, but it's an interesting, like, maybe case study to like see how the why the market does this, why investors are willing to pay so much. Like I understood the 30 times earnings for a Costco, but why now a 50, 54 times? Okay, again, it's possible that we are going to get a re-rating and we can go back to a 40 times or something like that, and then suddenly, yes, the stock does go down, or Costco can raise prices, which increases their margins, which of course will increase their earnings. And suddenly you have like a multiple compression, and suddenly the stock does look cheaper, although still expensive, but cheaper compared to where we're at right now. So yeah, that's the that's the too long didn't read, but now it's too long didn't watch. But still, interesting conversations, I have to say. Interesting conversations, but bottom line is we don't know what happens in 5-10 years. Like we don't know what the capex will be 5-10 years from now, although Jensen did say yesterday that we're going from 600 billion to $3 to $4 trillion in 2030. But that was also unclear for me. Like at one point we talked about large cloud service providers and enterprises, and then it was only the cloud service providers without the enterprises, and so that was strange.
Neil, we're getting some comments that GTP is out. I don't follow Mac, any stuff like that. So,
is it which GDP? Is it the first revision, the second revision, the third, the made up number from 3 months ago? Which one is it? Because with GDP numbers, you usually get some revisions. But since it's out, let's have a look. Yeah, for those that don't know, GDP numbers do get revised. I think two or three times or so. Who better than the guy who never sleeps, Amit? So, US Q2 GDP growth revision. Okay, so it's a revision, comes in at 3.3% versus 3.1%. There are multiple revisions done on this stat until we get the final number. Today, it was revised to 3.3 from the previous 3%, led by stronger consumer and household spending. Not bad at all. I don't know why he always does the Sam Altman thing, starts his sentences without a capital letter. I mean, you think you're cool.
Is that the new
So
thing? All caps is not cool anymore.
I guess it depends. If you want to scream, it's all caps. If you want to sound cool, it's maybe not starting with all caps. Pre-market right now, I don't know. Nothing really moves much at the moment. Nvidia is only down 0.6%.
CoreWeave is
Right
up
now.
7%.
Yes, sir. Yes, sir. CoreWeave is up 7%.
Is our boy Roberto here?
I also made my dad buy it yesterday, or yeah,
Nice,
yesterday.
nice.
So we're all pumping the CoreWeave, pumping the
Where we've
CoreWeave.
midlife crisis is over. Yeah.
Uh, a few moments later, boom, CoreWeave
So
crashes as a data center goes up in smoke or whatnot. Because that is a huge risk, of course, with data centers, right? If you have like structural damage, fire or whatnot, you're screwed.
yes, but don't bring that energy here, Neil. All right, let's not. But theoretically, yes. I mean, if you have, I'm pretty sure maybe some data center person knows here. Hopefully, they have like some doors that shut down or something. I mean, Meta is now building tents for their data centers. That's a whole different
Yeah,
story.
of
But
course.
yes, if something crazy happens, you're destroying a lot and a lot of capacity. Especially when we think about it, some of these are gigawatts, right? Expected to be gigawatts. Usually, it's in a lot of different buildings, but there is that risk there. So if you nope, let me not say that. I might get me. If you are short, there's a way you can make sure certain things go bad if you want to go to jail or something.
That is true. No, I mean, those data center have like super high security. Um, Ed here says, Neil, look at Dave. This is Jose, not Dave. But just kidding. Dave, the company, I did cover it a couple of days ago on the channel. Very
Did it go
interesting.
up after?
Did it go up after that? Yeah, probably because the market went up, but not because of me. It's up, yeah, 11% over the last 5 days. So, um, but yeah. Other than that,
We do have Marvell earnings today. Um,
yeah, but I'm not doing Marvel
yeah,
earnings today. Uh,
yeah. I don't think I'm gonna do it. I'll probably drop a video on my channel.
mhm.
Um,
What else? We have Marvell and Dell and Iron.
yeah. Oh, we have Iron today. Yeah, I think with
Yeah.
Jose, with Marvell, I don't know. This is a company where I don't mind not listening through a quarter. I don't think there's anything crazy that they're gonna announce or say. This is still like a long-term hold. As they shared a lot of information in their AI event that just happened in, I think, June 20th, or sometime in June. They kind of talked a lot about kind of the progress they're making with their ASIC plays. They have new customers, they have new wins. So I don't think they can share much more in this earnings. Regardless, I think earnings is going to be for Marvell is a big one. It either drops a lot or it goes up a lot. It's never a still earnings, and I think that's going to stay here. But for a long term investor, I don't think we can hear much more than what we heard from their recent event 2 months ago.
Yeah, fair enough. Did you have a look at what HP said yesterday? Although I don't think that's
No, I didn't
quite
listen to anything.
Viva.
Yeah,
We
that isn't
touched
a
on
real HPE. I don't
yeah,
think
yeah.
so.
Viva Systems. Is that something? I think we touched on that maybe during a previous stream because it's also one of those cloud software data and business. Yeah, no, maybe not that interesting. But anyways, today's Marvell,
Oh,
Dell, and Iron I think is more interesting later today. And tomorrow
yeah.
we do have Alibaba and Chaggy. It's a new
Mm.
company I'm looking into. Very interesting. If you like tea, did you know that tea is I think the most popular drink, or no, it's water is number one probably.
It should be water.
Yeah, the second most popular drink in the world.
Is it?
Yes,
I didn't
sir.
know that. I
Now
did
you
not know
know.
that.
Now you
Uh,
know.
someone was asking some of my picks right now. Um, I talked about it in a few videos. I think starting since Monday. That CoreWeave. I was looking at a lot of Bitcoin miners before Neo, and then over the weekend I just was like, screw it. Instead of looking at these Bitcoin miners, I think there's a multi-bagger for me, just staring right at my face, and that's CoreWeave. So I think for me, my biggest AI play right now is definitely CoreWeave. Um, I've mentioned in my previous episode, I think my previous few episodes, I kind of talked about how I've been entering it even more. It's already become a good position in my portfolio. And then yesterday's earnings from Nvidia, Neil, is like, I don't think I need to look anywhere else right now. I think if you have kind of like your Nebius, your CoreWeave, if we are really getting into this AI story that Jensen is painting of a $3 to $4 trillion by 2030 in capital expenditure, it's not all data center, but just in general, $3 to $4 trillion spent. How can one not see Nebius or CoreWeave be multi-baggers from these levels? It's so I feel like if I'm still a main holder of Nvidia, I'm not selling anything. But I think CoreWeave could be my big multi-bagger in the upcoming quarters. So that's
I
the
mean,
one.
you already 4x your previous position.
Yeah, yeah. So yeah, 4x. I was looking through it. So I sold throughout the list, throughout the way up. But a good portion of my solds were in the 140 plus. I saw I even sold some at like 169, 160 something. So buying down here in the 90s was really great already. But CoreWeave has become. I know there's this thing of like the debt, maybe insider selling. The partnership that they have with Nvidia, I think, is gonna make this a multi-bagger. I mean, I saw it with Oracle. I did a decent position on Oracle. I wish I would have gone heavier. I'm going with my gut this time. I think CoreWeave is gonna be my baby this time.
Yeah, I mean, what is it, 40 something billion dollars right now?
Mhm.
Revenue wise, what did they say they projected?
For this quarter, I for this year, is they say about 5.5. I think they guided up to.
And
So
that's
less than a
growing
10.
like,
Yeah, and that's growing. Yeah. And that's because the thing is, quarter four is when they're going to put up a lot of Blackwell data centers, Blackwell Ultras
ultra,
that
yeah.
they have rented out. So, in my opinion, if if Nvidia sends them the chips earlier, either quarter four is going to be a lot bigger than they're projecting, or quarter one and quarter two guidance for next year are going to be insane. Um, it, if you tell me with this, if this AI story is really how it is, I don't think it's impossible for CoreWeave to be a $200 billion market cap with the partnership that it has with Nvidia. Um, so yeah, this is to me the one I'm really liking right now.
So 4x from here, which is
Yeah,
$400. We were at close to $200 back in June.
yeah,
Okay, back in June, we were a bit too expensive, in my opinion.
yeah. So Grundy's asking for my average on CoreWeave. So first I bought in the 40s, not on IPO, but like 2 or 3 days after we kind of had the liberation day or stuff like that, that it kind of pulled down to the 40s. So mine was around 40. Um, I sold off most of it throughout the ride up. And now I think my cost average is around 88, 88 right now. Um, and someone asked CoreWeave for Oracle. I think I like CoreWeave right now a little bit more. I think both have growth opportunities, but for a real multi-bagger play, um,
Mhm.
I like CoreWeave a little bit more than Oracle. But I still own Oracle. I haven't sold my Oracle shares just yet.
Yeah, I mean, Oracle is projected to generate $17.2 billion in fiscal 27. That's more than 3x from today, revenue wise. So if you want to slap a 10x multiple on this number, you probably get here your multi-bagger for CoreWeave. Um, quick answers of a couple of questions here. I did not add more to Opendoor. I'm not that crazy of a degen. I have my small position and I leave it at that. Um, Thoughts on Iron going into the earnings? With that as well, I have my position and I'm letting it ride, not grabbing any profits yet. I do think that, I mean, we already know what they're going to report because they report each and every month. The question is about what's happening next, and that's the most interesting part here. I just don't see how we're going to get anything negative from that right now. Let's see. Yeah, someone said like we both own AMD and then Nvidia's NeoClouds with Nebius and CoreWeave. Is that unethical? And I was like, no, actually, maybe that's the genius. That's the genius behind all of it. We have an AMD, but we're also playing Nebius and CoreWeave. So we have that Nvidia so-called let's say exposure there. But yeah, AMD multi-bagger. I think both of us agree that AMD can be a multi-bagger from here.
Yeah, I like AMD and CoreWeave. I've been thinking about it, Neil. If I was to have a seven position portfolio, how would it start to look? And I think that's where my portfolio has gotten a lot lower than how it was maybe in 2020s. But I want it to get even smaller and smaller as right now I see, obviously it comes with big risk. Nvidia is in talks with US to sell black AI chips to China and reportedly willing to give the US a cut of blackball China, according to Fox. I mean, I thought we kind of knew this was already a thing being discussed.
Correct.
Right. But I hope it moves the stock price up.
Yeah, I mean, we've known this from last week already, I think. But of course, since Nvidia reported yesterday, Fox needs a little bit of clicks. So
I think so. Breaking news: Nvidia sells advanced AI chips.
Someone did ask or did comment here. Where is this comment about? I think Geoff said it. BMNR from Tom Lee. I did a video yesterday after I talked about it during the stream.
Did you buy it? No, you don't like it, right?
No, I did not buy it. Yeah,
Neil
I did not
said,
buy it.
"Screw you, BMNR holders."
No, not at all. I mean, I think
he
my
said,
video
"Screw you guys, go home."
Maybe that's
too long to watch. That's what it was.
Yeah, no, I mean they're basically trying the micro strategy of course becoming that crypto treasury, in this case with Ethereum. But with Ethereum, their case is that Ethereum does produce something. They compared it to oil, ExxonMobil, etc. But yeah, I mean, you can make, of course, I think they said 3% or so by staking Ethereum. That's how they make money. And the more Ethereum that they have, the more they can earn. And with that, they can buy either more Ethereum or buy back shares. They have a $1 billion buyback program already, or they can pay a special cash dividend. But this whole thing works, of course, when the price of Bitcoin continues to go up. And if the adoption of the Ethereum network becomes bigger and bigger, like if the trillions of dollars in the financial institutions and space do switch from whatever we are right now, Swift and ACH, does go on the Ethereum network, then okay, all of these transactions, you get to earn some money from all of that. Lots of ifs and buts. It's you're betting here on perfect execution. You're betting here on Tom Lee's connections with big money people. And of course, you're betting on the fact that Ethereum does continue to go up. It's an interesting story. Of course, it's still up 10x since June. So you 10x your money if you bought in June. You almost 50x or whatever in a week after that announcement was made, when they turned themselves from a Bitcoin miner to a Ethereum treasury company. But of course, since the peak, it's down 70% or so. And now it's around $46 for a while. So we'll see. The moment, if one day I do open a position, I'll let you know. But this one is probably going to be like the mother of all YOLO bets. So I'll first let Roberto go in, dip his toes on this one.
Roberto and YOLO. Well, CoreWeave is not a YOLO bet. If I get the two of you in it, it seems like it's going good.
Yeah, once we're in it, maybe we should invite Tom Lee on to perfect this whole move. But yeah, let's see what the pre-markets are telling us right now. I would be surprised if we're not going.
I'll be right back.
Greenish. Oh, we are green for now. We are green for now. Pre-market does seem like Chinese names are taking a hit. I know I said Alibaba is reporting Friday. Alibaba is down 2% pre-market. PayPal is not really moving that much, but okay, that's fine. Nvidia is basically flat. Nvidia is basically flat, um, which is a nice reversal. Still, wait. Sven bought long on a BMNR, still up. Didn't you see the? I did see the interview. I did see the interview. I saw the interview of Tom Lee on another podcast as well, where talked a little bit more about the strategy and the vision. I made a video about all of it yesterday, talking about strategy, crypto treasury, why that exists, how the Ethereum treasury is different than the MicroStrategy one, what the plan is, etc., etc. Yeah, Amit has already a pretty big position in uh, in BMNR right now. Again, it's if you're not feeling comfortable buying a certain company, like I'm not comfortable buying BNMR, maybe I just don't believe the story, or maybe I don't fully understand it. Although in this case, I do think it's more about believing than understanding, and that's fine. That's fine. As you know, I'm more into semiconductor AI fintech companies than crypto one. Although you can say that I have my crypto exposure through Iron because they are still mining Bitcoin and doing so at I think the best rate than every other player out there. Now we're getting the AI cloud side of the business, which I think that's also something um, hopefully analysts would like to hear more about during the earnings call about Iron. I mean, stock has done very well. Stock has done very well over the last couple of months, especially. We're here at $23 pre-market, which is it all-time highs? No, okay. All-time highs was of course back in the 2021 bubbly period. But yeah, Iron is a very interesting play. Um, I yeah. Okay, you see, Opendoor maybe might be a Opendoor was, and I said it. I mean, these swings here are crazy, right? Opendoor. I made my video around here, like literally $1. That's my position. It's 1,000 shares at $1 that are now worth way more than that in just a matter of a month or so, which is quite crazy. But Opendoor, I said from the start, this is a meme stock that if it works out, great. If it doesn't, it doesn't. Um, but there is of course here an actual business behind, like there is real estate behind this. With Bitmine, there is, yes, the Ethereum side of it, which again, MicroStrategy Bitmine in my head is, it's a crypto treasury, but it's basically a leverage play. Like if Ethereum goes up 1.5x, Bitmine will go up probably 2x or something like that. Of course, you then have the staking side of the business, which could earn them hundreds of millions of dollars in income, and with that they can play around and do other things. But yeah, it's more about believing than understanding. And Opendoor is definitely more about switching execution and hoping that the rate cuts will help the housing market. I mean, the CEO is already gone, so I guess the meme following did force some change in the company, which, when you think about it, is quite crazy how much power retail has these days. Yeah, no, that's also one thing I said yesterday. Like having these types of companies, crypto treasuries, does get people exposure to crypto when previously they could not have exposure to straight out Bitcoin or Ethereum. Jose, do you own
That's it.
any Bitcoin?
No,
Crypto?
not no crypto at all. I don't think I do. I think the closest things would be like any Bitcoin miners if I was to buy any,
Yeah.
or anybody who owns it independently in their portfolio or their balance sheet. And Justin, I haven't looked into Resolve. I know a lot of people were discussing have talked about this. So maybe I'll look at it eventually. especially right now with Nvidia earnings, is me just reading it like 30 times, seeing if there's anything I missed or like or didn't hear. Because Jensen usually shares a lot of great information there. Um, Rick, I mentioned we news on Blackwell. I think this was just refresh news that Fox is kind of pumping out right now. I think any real news would be once we get an actual confirmation on Blackwell chips. But even Trump himself has said that Jensen wants to come over to discuss the potential Blackwell. But what I think it's interesting, Neil, is yesterday we heard from Nvidia that while the administration has said they want to do this, there's still no legal paperwork behind it, and that's what's stopping Nvidia from sending out any chips. So I wonder when that's going to happen, when that actual legal law or whatever is going to go through. Because I think Nvidia doesn't just want to, hey, we sold, we're giving you 15% right now. I think they need to have it in writing, which makes sense in my opinion. Stefano says, open, very speculative position. I know you just mentioned it like 5 minutes ago, right, Neil? It's like for you, this was almost truly a meme play. I think you even
Literally
called it.
roulette.
Um,
Yeah, but it can turn into like, let's be honest. When I talked about it at $1, it was dead in the water. Although it did already 2x from the 50 cents it was back then. But yeah, it was completely forgotten, and it got that meme status because suddenly, like, it became the number one stock talked about. I think on Wall Street Bets and maybe on Stock Twits or whatever that platform is called. But yeah, it's a speculative position. That's why, like, the amount I put in is nothing compared to my real positions out there. Um, so yeah, but who knows? Maybe it can work out.
and someone was asking Yo-Yo, do you know what are some Chinese GPU competitors to NVIDIA's H20? The only closest one is the Huawei Ascend chips that they have. But there have been issues with that in the past. The other ones is we do know that certain big players, like I think Alibaba and all those big techs, just like
Hmm.
everything that goes, they try to develop their own ASIC solutions as well. So I think they also have kind of like their own AI accelerators. I wouldn't kind of put them as a competitor, but just to let it be known that even AI, even China, big tech players also try to develop their own chips as well.
Correct. Quick touching back on this. You consider a YOLO bet? I do consider a YOLO bet, but I do not have shares in that YOLO play. Since quite convincing, considering the blockchain adoption rate by Wall Street, Ethereum should go up long term. Again, we're still very early in that journey, and there's again a lot of ifs. Like, if that happens, will they all choose the Ethereum network or will they choose something else? Yes, USDC as stablecoins, for example, USDC does use the Ethereum network, so you can make the case that most stablecoins will run on Ethereum. But again, it's a lot of ifs, and the structure there is still a bit unclear for me at the moment. And so for now, it's in the believe or not believe bucket.
For me is that bucket of I don't know, so I'm not gonna say anything.
Yeah, yeah. No, that's the thing. Like, you don't have to own. I know it's very popular right now because it's Tom Lee and everybody's buying in and blah blah blah. But if you don't have to buy it. Like, nobody's forcing you to buy anything. I do want to. We
Well,
have
if
a
I can, just one
reaction.
quick shout
Yeah, yeah,
out
yeah.
to Gio. He did become a level AI data sensor member on my chat, so appreciate it, Gio. Gio's been a huge supporter of my channel for a while, so thank you, Gio. Just wanted to give a quick shout out. Let's see here from Chris.
Uh, Quick correction here. I did not finally buy Rocket Lab. I bought Rocket Lab 10x
In the
ago. Like,
20s, lower than that, Neil.
yeah, at
Twos,
$4 and
fours,
something.
nice.
I've been a Rocket Lab bull for a long, long time. But we do have Chris Patel answering or commenting on that post right here. So the luxury tax discourages high payments, despite Nvidia's first mover advantage, overcharging risk losing customers. Others may replace them, but it's unlikely companies like Amazon or Meta can be easily substituted. AMD and to a lesser extent Intel are aiming to gain market share. Google's TPU's offering pose another threat. Controlling its own destiny, Google could undercut prices to capture AI compute market share, pushing hyperscalers towards Nvidia alternatives as means to keep control of costs and margins. Maintaining margins is a delicate balance. For shareholders paying a premium, even a slight miss in margin or growth could highlight the cyclical nature of semiconductor and dramatically reprice multiples. Okay. While there are other industries that could supplicate some of the headwinds from this, those industries are still in their infancy and wouldn't be able to replace the data center business in a short period. Nvidia is still a great company that's doing amazing things, but tempering investor expectations is likely the prudent course of action.
I would say, I mean, I know Chris is followed by a lot. It seems like he's entering the Nvidia bear case. This is the first. This is if there's levels to becoming an Nvidia bear, Neil. I could tell where one is in the studying of Nvidia by seeing where the bearish thesis is. This is level one of this is just I'm entering, becoming an Nvidia bear or Nvidia kind of anti-play. This is the first thing I'm gonna discuss. This concentration, the ASIC market. I stopped kind of reading when line number 4, Intel aiming to gain market share. I don't see this happening within the next 5 years, even anything. So yeah, I mean, this is always the big thing, right? I mean, the ASIC players, and it's the thing that keeps Nvidia going. Google's You're telling me that Amazon and all these players are going to build an AI chip that's way better than NVIDIA when Google, who was almost the mastermind of a lot of these AI innovations, they're a lot of the transformer, kind of like some of the innovations in both the hardware. Google was one of the first to do a lot of interconnects, of connecting a lot of TPUs together. They were also ones that kind of developed a lot of the software solutions for AI space. They've been doing this since 2010s. Yeah, and during version 7, variant 7 of their TPUs, even doing with all this heavy research, they are still so heavily reliant on NVIDIA. I can't take the ASICs threat that serious if 7 years still brings you back to NVIDIA. You're telling me Microsoft, Amazon, who are only year 2 or 3 of building some form of ASIC players, are gonna say, you know what? I don't need you anymore. So Skittles, no, you haven't been banned or just being ignored. Skittles, just quick shout out. Don't want to make anyone seem ignore what's going on. But yeah, I feel like this is level 1 of the bearish thesis for Nvidia. I can't wait till he gets to level 2 where it's like the power constraint. Then level 3 is kind of like understanding the MI 400. And I agree that I agree, Mansa. It's not green in every investment. I understand the bearish thesis of ASIC, but it's important to understand the technological difference. It's like me saying the bear case. Oh, what happens when money runs out? I mean, that could be a bear case for any company. You have to understand what is the probability of that bear case. And every bear case has a probable cost. You have to understand the probability of that bear case being a success. What is the high success? For me, ASIC is not one of them. Power shells could be an easy thing. The slowdown of innovation of AI is another thing. Putting ASIC as the top threat is not where I would put it into.
Yeah, I mean, out of all of it, of course, we've talked about Google being the best out there, alternative out there. I think Google, out of the Amazon, Microsoft, Meta, they are the ones that rely the least on NVIDIA because their solution is the best solution for them. Right? The Google TPUs, a lot. That's the thing. Trainium, Meta's chips, they're specialized chips, right? They're chips that are being built for Amazon's. Most of them are just for internal workloads. You want the NVIDIA chips out there. You want the AMD chips out there for general purpose, right? That's the thing. For everyone else, you will have specialized chips for specialized workloads for different specific things. But the NVIDIA, I mean, this is something that we probably talked about like a year and a half ago. And still, Like, okay, we had this headline, right? Oh, Tranium, like they offer discounts. Would you offer discounts if it's that good? No, right? If it is that good, you're not offering discounts. Um, so you're probably offering discounts because maybe it's cheaper to run some workloads on Tranium, but you're not going to offer 25% discount if it's better than than an Nvidia chip. But okay, every bull thesis needs to have a bear thesis or understand, let's say, the bear thesis. But that does not mean that the bear thesis is a valuable one, like it's a logical one. We can talk about various companies where I see like I'll give the extreme example here of PayPal. The bear thesis of PayPal is that nobody uses PayPal anymore. Okay, that's some people's bear thesis. To counter that, I bring the facts and the numbers and say that today more people are using PayPal than ever before. So I can take your bear thesis, listen to it, and just throw it out of the window.
Yeah, no. I mean, like agree that every company needs a bearish thesis. I mean, that's what keeps you sane. Like I mentioned, for me, the biggest scary things for Nvidia are one, supply chain. The reason I talk about supply chain is that's when I know you're getting into the high levels of the bearish thesis. Supply chain. Nvidia has so many thousands of products. What happens if Micron or SK Hynix can't develop their memory solutions anymore? Nvidia's kind of roadmap goes to hell. They are so dependent on all these other players in the supply chain market that that's a real bearish thesis. What happens if one of their liquid cooling partners with or their copper partners just have some major issue? It's going to affect the whole supply chain for them. That's the unfortunate thing about being a server, a complete server system, is you're no longer just dependent on yourself. You're dependent on other players. That's a real business threat. If you're coming with the ASIC threat, you have to show me numbers of performance. What is how much workloads are being used in the TPU versus NVIDIA's GPU at Google? Is it a marginal difference? How has that changed throughout the time? Marvell, Amazon with their Trainium, with their well, now it's just a Trainium. There, I think they're just doing the one chip platform. What is the share? Who you have to give me the technicals. How much revenue can you get from Amazon's Trainium, and how much earnings can you get it versus a GB200 or GB300? Giving me those actual numbers and saying, look, it's actually been increasing dramatically. The Trainium 2, Trainium 3 can give you on par revenue growth from a GB200 system. That's the threat. But when you're telling, there's a lot of charts right now that show you that a lot of these products in forms of revenue numbers, it's very minuscule to what you're getting from an NVIDIA platform. So ASIC is always a threat, but I think right now, or even in the next 2 to 3 years, the development process of chips is not something that comes out overnight.
I think the biggest bear thesis, Jose, which we missed, is what happens when quantum computing comes and destroys every
that,
GPU out there.
uh,
That's the big bear thesis. Isn't the best bear thesis on Adobe? There is also, of course, a bear thesis on Adobe that nobody is going to use the Adobe ecosystem anymore because you can generate images on other on other websites as well. Which actually, talking about that, I can show you something because I got an email from someone at Adobe that watched the video and um, they wanted to share some information because Adobe, for those who don't know, they have Adobe Firefly, which is incredible. So, and it's I think it's free to use. So this is the website. You can do text to image, text to video. You have boards, translate video, and all of that. And of course, it's all in the Adobe ecosystem, which means that most of it is commercially available. Um, so yeah, image, video, vector. Any image you want me to generate or try to generate here? Anyone?
Sorry, no. I mean, I'm just I'm reading here some of the comments that
So
I forgot.
let's
I
look
don't
at
know.
bulls running after bears. Let's do bulls running after bears. So in this, you can look at the models, and Adobe actually offers all of the frontier imaging,
Hmm.
well, most of the frontier imaging model. The recent one here is the Gemini 2.5 flash image, recently released. That's already available here on Adobe. So every time I hear, I didn't quite understand the bulls running after bears, so maybe I have to
Yeah, you
switch
got this
to
one's
a
gonna be
model
better.
here. Um, so yeah, the more models that come out, the more powerful an Adobe becomes as well, because it's all integrated
Hmm.
um, inside inside the ecosystem. Huh? Different style of image here. Bulls
Yeah,
running after bears. Not bad. Anyways, I don't know how we got to this thing right now.
yeah. I don't know what was your video about, and what was the email about?
The email was about that they were going to announce that they have a new model, the Gemini 2.5 model integrated in Adobe, um, etc., etc., like an embargo thing. Like I couldn't say anything before. Um, I found that quite interesting. Uh, there was here a comment. Doo, doo, doo. Maybe this, or maybe you did already touch on that.
Jose, could you elaborate further on your theory about Nvidia's efforts to take over the cloud space and how likely you? I mean, I don't know which theory we're talking about, Jose, Evo theory, or just what we're seeing Nvidia doing. With what Nvidia's doing
Your evil
is
theory.
no. Let's go with what Nvidia's doing right now. So right now, Nvidia's building. Right now, there's in the cloud space. Obviously, we have the big cloud players that are buying a lot of AI chips. You have your Google, your Amazon, your other players like that, and they have created. They obviously buy from. It's a form of frenemies relationship where we buy from you, but at the same time, we're developing a form of chip that can compete against your product in the future. Maybe not the near future, but in the future, we're going to most likely do some form of dependency or a few. Well, if we could do it successful, that's the overall theories that they're doing. So Nvidia right now, what it's trying to do, it's like that's good. You guys do that. What I'm going to do is I'm going to build my fleet of neo cloud server providers that if you do decide to no longer need me, I have other players. And that's why I think NVIDIA is doing really well to kind of work with companies like CoreWeave, which has become a favorite of mine, and Nebius, which have become a favorite, not a favorite, but it's definitely top there, to say, look, you guys are playing with fire. You guys are making your own ASIC solutions. I'm going to make my own cloud server providers with or without you guys. And then my evil theory is if NVIDIA ever wants to kind of just destroy the market, they can just start building their own data center solutions. Um, I don't think Jensen will do that. But if there ever is the need, I think they should do that. You're muted, Neil. I thought it was me, but you're muted.
Yeah, I am muted. Um, this is the comment about, I think, the Intel part that Kevin O'Leary said that they should sell Intel for its parts and whatnot. I think that's just the stupidest idea. Um, they don't have to win the fight; they just have to stop losing. That's the thing with Intel. Stop losing, and you're worth way more than what you're worth today. And the foundry business will also take care of itself. You could maybe make a case in the future that yeah, maybe the foundry business needs to be a separate entity or whatnot. But I would still like Intel to hold probably the majority of the shares. Um, but yeah, that's just my opinion. But I think Kevin O'Reilly still. I still remember the clip where he tried to sound as if FTX is a super safe platform to use. That didn't end well for him or anyone, I think. Um, Switching here to Darius, first of all, thank you for the super chat. Not to switch the topic, but we did switch the topic, so that's on me. I have 3K I need to flip, and was looking at Zeta and WFRD. WFRD, Weatherford International. Would love your guys' opinion. Jose, have you ever heard about WFRD?
Nope. Seta has been very popular, but the other one I haven't. I don't. I've heard of Seta by name. I know a lot of people recommend it. The other one I have not.
Yeah. So let's have a look. And by the way, it's
Roberto, good
3,000.
morning.
So
CoreWeave.
yeah. Good morning, Roberto. I know we're feeling very well today. Um, but yeah. So it's an energy services company that provides equipment and services for the drilling, evaluation, completion, production, and intervention of oil. Okay, this is already out of my out of my circle of interest or competence. So, I mean, I've covered Zeta before. I think Zeta is quite a good company. That's not to say that you should go and put $3,000 in it. Like, you have to know what you buy. So that's up to you. But me personally, I understand Zeta better than the other energy play right here. And I did a video on Zeta on the channel. So if you want more information, all of that is in the Zeta video. So of course, the price of the stock was a bit lower than where we're at today. Did you pull up a comment that I removed?
No, I don't think so. But here, let's see. Eddie just posted a question. Real question for you guys. How long will it take for Intel to turn around? Obviously, this is not an easy business. This isn't going to be an overnight story, but how long will it actually be? In my opinion, for a real turnaround story, you have to first showcase that your manufacturing side is pretty strong as an internal product. That's going to be your first kind of evidence to your potential customers that you can do things right. And that's where 18A comes in, right? 18A, while they do have kind of external customers, it's mainly going to be an internal product. And for them, 18A is going to be that evidence that, look, we can manufacture at scale. Our products are coming out with this new advanced nodes, and they're doing really good in forms of performance, in forms of power, efficiency. 18A has to be the evidence case. That evidence case is going to be for 14A. So now 14A is when you should expect to see that external customer base. And 14A is still, I don't know what the actual timeline for 14A is. I would say maybe still at least a year plus from 18A. Maybe even a little bit longer. So for us to start to really see the financial turnaround story in actual top line, I think it could be at least 24 months, maybe more. Um, Now the stock price could see reactions a little bit earlier, right? You can kind of see maybe sometime 12 months from now that Nvidia Intel is starting to get customers. Even though they aren't getting paid, haven't gotten paid yet, they're starting to already get customers loading up for 14A. And that can cause the stock price reaction. So I do believe the stock price can react a little bit faster than the actual financials because we will hear from Intel themselves. Look, we just locked in another customer for 14A. Oh, look, another hyperscaler just announced they're using 14A for some of their AI chips, or this big kind of semiconductor company is using us for 14A. So I would say at least for financials, more than 24 months plus. For the stock, it's all depending on news, but for me, it's at least 12 plus before you see some real engagement of 18A. There could be other reasons why the stock moves. Maybe United States wants to give more money to Intel that could create price reaction. But for a real price movement that I think would be sticky, it has to do something with their manufacturing customers. And you won't hear that, I think, for maybe another 12 months. Even longer than that. That's my short-term look on it.
I mean, you might not see that in the financials, but you might hear it.
Mhm,
Yeah,
mhm.
no, I agree. I think it's a catalyst-based moves right now. Like if they announce contracts with, I don't know, another, again, with an Amazon or maybe with another player that 18A or 14A, probably 14A, They've got a commitment of X amount of billions of dollars. You won't see it in the financials today, tomorrow, or even the next 12 months. But now Wall Street says, okay, we now believe the story, and the
Hmm.
stock will move up. That's the thing. It's a catalyst based moves might be coming. Yeah, the $2 billion from SoftBank is one of those moves, of those dominoes falling in, maybe hopefully in the right direction. And now we are waiting. But yeah, essentially is 18A is the big step for the next couple of months, where we're going to see how good it is or how bad it is. Because if you read the rumors every other week, there's like another report or rumor coming out that it's delayed, it's not good, blah blah blah. But we will find out way more in the next 2 quarters when it comes to 18A. And 18A has also a couple of versions. So we'll see what happens with that. But yeah, I agree. Financially, Intel, especially the impact from Foundry, will not be seen in the next 2 months, I would say. But stock wise, you can get some positive catalysts. I mean, we already got one in the last month. But yeah, for it to move even higher and higher, you of course need the business to do better and better.
Yeah, agree, Neil.
How much of a percent to hold in cash in the current market? I can't decide if I'm bearish or bullish, as we've had almost, yeah, I'd say definitely 2.5 years of a bull market. So you have 25% cash. I mean, 25% cash today is a good chunk in cash. So I don't think you should be feeling stressed or bearish, because you have 75% exposure. But 25% to me is a lot.
Same.
To
Again, it
me,
also
to me is a
depends
lot.
on the age, right?
Yeah,
Neil, maybe if you're a lot older than us, 25%. I think for our age, 25% does seem like a lot. Um, but at the end of the day, it's also all about how you are emotional. If 25% cash is what helps you sleep at night, while you maybe are a little bit more aggressive in the market, I'll do it. But yeah, I
yeah,
don't think there's a magic. I mean, theoretically, the magic number, especially being in the S&P 500 in a long-term mentality, is always have it in the stock. That's the easy number. That's the one that makes the most mathematically sense. S&P 500 or the Qs tend to be a growth over the long term of things. But it's not about what is the best number. It's what's the best number for you not to act on um, emotional trading or emotional investing. So for me, it's a lot smaller. But I would never say, 25%. That's crazy.
yeah. No, for sure. I mean, if you're at the end of your, let's say, investing journey, or you want to retire next year, then 25% is maybe even too small, right? It really depends. For us, I'm 31. Jose, you're 31 too? 3?
33 in tomorrow.
Tomorrow. Yeah. Um, so yeah, for us, you see, 25 is quite a lot. I mean, at the start of the year, I had 14, 15, and that was good enough, because we did have 2 years of a bull market. And I did want to prepare myself in case some some volatility was coming our way. Of course, that volatility did come quite quickly with the DeepSeek drama and then the April drama. But yeah, it's up to you. Like, we don't know who you are, what your situation is, so everyone's different. Like, some people have 0% in cash, um, like always invested.
How old were you, Neil, when you started investing? I think I was 21 or 22. I just got my first engineering job and I was like, I need to put my money to work. How do I do this?
Yeah,
Eh,
it was 2016. So what is it? 9 years ago. So 22, 23. Yeah, 22, 23. But then again, I mean, the amount of money I had back then was nothing. So it's like
yeah.
0.1% impact on the portfolio today.
Exactly.
Um,
But it
but
did
yeah,
give
it's
us a lot of
crazy.
learning, right? It's all about the experience. So for me, 21, that was almost 12 years ago. So a little bit over a decade for me.
Yeah. No, it's definitely about like you can take courses, do studies, learn, read all of the books, but the moment you put your own money in it, no book will be preparing you for what happens when you suddenly see yourself opening up a position. You think you've got it all figured out, and the next day there is a headline coming out that has nothing to do with your position, and suddenly the position is down
Congrats.
20%.
Yeah,
Congratulations. I mean,
I
congratulations.
Neil, I remember, I think in like 2017, I had like my whole portfolio was on AMD, $10,000. I still remember this day. I think I only had that one stock. I wish to this day was still that stock because I think in 2017 it was like $3, $4. Um, but I had like 10,000 all on AMD, and I was listening to an earnings call and something happened and the stock dropped 50%. Not 50%, some crazy numbers. It dropped like crazy. And I just remember my gut just going, it was the weirdest feeling. But it's like I lost like 3, 4K in like a few weeks. And like I remember that feeling, but it's like now a few not even the first not I'm not gonna say, but those kind of movements come on like really daily basis for me now. It's like I don't feel it. It's like
Hmm.
it,
Yeah,
it it's learning now. Learning it's better to learn those bad mistakes when you're starting off because in the future it allows you to kind of create portfolio um your portfolio advantage and allocation and understanding what works for you and what doesn't work for you.
correct. I mean,
Um,
I think that's like when you start with a small amount of money, of course, that small amount of money, even if it goes down a little bit, is in the grand scheme of things a lot of money. Today, of course, when we have these red days, for example, in April, of course, the sum of money that I lost in the matter of 24, 48 hours is insane, like compared to what I previously had. Um, Also, the same thing happened in 2022, right? 2022, my portfolio was completely crushed because I was overexposed. Nobody knew what the heck was going on, right? We just came out of like this pandemic rally. Everything needed to be tech, and we were all staying at home. And so, yes, the financial impact of the portfolio was insane money wise, but it trains you for the future. Like today, like in April, Jose and myself, we had the therapy sessions on the live streams, and we're like, you know what? Yeah, okay, it's not great to see things red, but I'm seeing here plenty of deals. Like the moment you can make these switches, of course, it's never great to lose a big chunk of money on paper. Um, but the moment you start to see these things as opportunities, is I think the moment your investing journey becomes a bit more enjoyable and better.
and I agree. I know we're about to market open. Rick has a great investing. It's more like managing your emotions, and I think that's the great thing to know. Is like that's why I never. It's very rare for me to ask someone their portfolio size because I remember 21 years old me. $1,000 would have been a huge thing, right? $1,000 was a big moment. Now, someone with 100,000 or 200,000 or 1 million portfolio, 1,000 might not seem like a lot to them, but 100,000 might. But it's all about perspective. It's how you respect that money that you have. It's how you control your emotions when the percentage of your portfolio. So I don't care if you own one share, 1,000 shares. If you understand to control your emotions, that's going to be more important in the long term of things and allow you to be a better investor. Um, and seven, you don't lose until you sell.
Yeah, no, you don't lose until you sell. You also don't make anything until you sell either. Jose, you can do your ding ding ding.
Ding, 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 ding. This is not becoming a thing, guys.
No, but I agree with which is also why a lot of the books that I do have is about behavioral psychology and things like that, because I do think it helps you out a lot more. Like reading a company's quarterly results and 10Ks and 10Qs and all of that, okay, it's fine. But at the end of the day, you're human, and the human psychology is what makes you make mistakes at the end of the day. Like the human psychology is why stocks go down on good results. Um, Nvidia is green. Nvidia is green indeed. These things we will update in a bit, but you can see all of it. Most What's red? United Health, Google, red is 0.09. Apple is down and Meta is down a tiny bit here. Um, as well.
It's about being consistently not stupid. I
It is
agree.
that
It's
is
about starting. It's okay to start off being stupid as long as you're not consistently being stupid throughout your whole thing. New all-time high for who? For Nvidia? What's going on? Who's
maybe
new
for
all-time high?
maybe for him.
Oh, nice. Congrats, Daniel. Who
This is
wouldn't
a
care
good
about this? uh,
uh, that's a
let's
good one.
see. So what do we have? We have applied up 5% on the 17th. We have
Yeah.
CoreWeave killing it. Um, Man, sometimes I wish that my puts do get um
Yeah.
like
Get hit.
exercise so I can get it at
Yeah.
cheaper, but then I don't mind taking the premium either. Um, but luckily I'm in both. I'm heavy in shares and I did have some sold puts against it, so really good. Um,
Oscar is red, so we're back into normal territory for our streams where we go look at Oscar and it is red. It is red. Russell here said, "Look at Bruno Fernandez' age, and you won't go wrong for everybody wondering how old I am. Although I am a bit older than my so-called self in the football world. That did score 2 penalties yesterday, but they lost against the fourth division team. What a bunch of losers." Um, Question about SoFi. It's been a while since I haven't talked about SoFi, I think, but that's because the stock has been doing very well. Um,
so you want to keep it shut?
yeah. Um, been watching the channel for a while. Thank you. What's your thoughts on SoFi in the next few months with interest rates expected to drop? Well, interest rates are expected to drop. Will they drop? That's another story. I do think we're going to get a 25 basis points cut in September. Um, the thing with SoFi is that we've seen it over the last couple of years. High interest rates, the business is crushing it. Lower interest rates, the business will crush it. Will continue to crush it as well. So yes, I do think that financials will get some boost from interest rate cuts, and I think SoFi is one of them. But I mean, SoFi has been doing. Where is
Whoa,
that?
baby.
GitLab? Who's baby?
GitLab. Sorry, GitLab is in 48. I haven't even seen this one. Um,
GitLab
I
is
guess lately
Yep.
it's been getting kind of that love from the software space, right? We saw MongoDB, I guess, 2 days ago, and yesterday we saw, I guess, Snowflake.
Snowflake.
Yeah. So I wonder if it's just this whole momentum from the
Yeah, Snowflake doing very well. I wonder what CrowdStrike ended up. Wow. Look at this. CrowdStrike is up 1.9%. Look at this candle.
Wow.
It's from today.
Yeah.
Insane. I do think that's because they expected, I think, their ARR to go up by 40% or so because of AI,
Mhm.
Falcon contracts or things like that. But look at SoFi has been doing insanely well. Like we're at under $9 back in April. We're now at 25. I know those that have options, especially short-term options,
Gotcha.
will always say this is not enough because it needs to go up, and otherwise my options will be worthless. But as someone that does not have options in SoFi and only shares, this is good. This is good. This will be worth more in the future. I don't need this to be $45 next month or $75 or $100 next month. I'll be honest, if it does reach $100 this year, I'm probably taking quite a lot of profits. Purely because I don't think it should be at $100 this
Yeah.
year.
Yeah. I'm really green, strong. A lot of the Bitcoin miners are up right now.
Nvidia is down now. Oh, it's the end.
Um, Mara's
Nvidia is
up.
down and Oscar is green. Can
All
you
right,
believe
time to
it?
end the stream.
Can you believe that? But CoreWeave is up 5.2, so that's good.
Yeah.
So that's good. PayPal is flat as well. It's a good day today so far. It's a good day. We cannot complain. We cannot complain. I mean, we cannot complain at all because if you look at year to date, I mean, yes, there is some reds here and there, but year to date we are
I thought
very
this was today. I was like, what is this, Neil? I didn't refresh my portfolio.
This was last Friday, remember? No, this is year to date performance. I mean, come on, this is
Um,
extremely good. Of the last 3 months, it's even better. So
and,
we cannot
um,
complain.
yeah, just before we close out, just I know we had a few people commenting about Marvell again. Marvell reports earnings today. I own this stock. I'm not too obviously being so close to Nvidia. I haven't followed it too much for this upcoming earnings. Regardless, they did share a lot of information in their AI events 2 months ago. I will be covering their earnings during tonight's video. So if you want any information about it, feel free to join me. I am bullish on Marvell long term, very bullish. This is a stock though, Neil, that moves very volatile after earnings. It tends to either go up really high or down a lot. So be prepared for the volatility. Regardless, long-term bullish from what we heard just 2 months ago at their AI events. There was somebody else who asked about a question about AMBA, ticker AMBA. This is Ambarella. It's another semiconductor company. They provide kind of chips for the automotive space a little bit. One that has been getting recent love after earnings. I might cover that on the newsletter. I don't think I will do a video on Ambarella though, but I will be covering it on the newsletter. Quick plug-in, what the chip happened, completely free. Every other day or so, some free semiconductor news. Today's
Yeah,
just going to be purely Nvidia.
and before we end, you can all write early happy birthday to Jose in the chat because tomorrow he's getting even older. So
Hopefully
and
wiser.
wiser, yes, hopefully, and wealthier as well.
Hopefully, yeah. Hopefully the Bears don't trigger me too much tomorrow like they did today.
I mean, tomorrow we're probably not going to go live, so they cannot trigger you, but they
They
can
can't
try their luck next week. They can
next
try
week.
their luck next week when we're back.
And appreciate the birthday. Appreciate that, Neil. Thank you. Thank you. It's definitely fun and definitely day off tomorrow unless we need a therapy session.
Yeah, but tomorrow is your birthday, so you're probably celebrating. Unless things are really terrible, then screw the birthday and let's
Screw
go
the
therapy.
birthday. We go therapy session. But thank you.
Exactly.
Appreciate the love I'm getting here. And see you guys Monday, right?
See you guys Monday. Yeah. I think next week, what do we have? I think it's quiet. Maybe
Yeah.
Salesforce. I think Salesforce. But
Yeah. If
that's about it.
anything, we also have a lot of now after earnings, so you kind of have a lot of those conferences.
Yeah. The analyst conferences.
Yeah. So we'll probably get some of that.
Yep. So with that, thank you all for joining us. And we shall see each other, well, probably on our channels in the videos,
Yeah.
but definitely Monday morning.
Yeah. And
Definitely
I'll see
Monday
you in
morning.
like a few hours. Don't forget, we have a show.
Almost forgot. But yeah,